Right now, while you're watching this, something massive is unfolding behind the scenes, and almost no one fully realizes it yet. The global financial system isn't just shifting. It's being quietly rewritten. A calculated high-stakes move is underway that could shake the very foundation of the US dollar's dominance. By the time most people understand what's happening, the balance of power may have already changed. China is making aggressive, strategic moves that are accelerating this transformation. The petrodollar system is beginning to fracture, and digital currencies are stepping in to take its place. One nation is positioning itself to influence the flow of trillions, and if you think this doesn't affect your money, your future, or global stability, think again. Let's break down what's happening in the Middle East. While Washington struggles to maintain a fragile ceasefire, Iran has tightened control over one of the world's most critical choke points. Only a limited number of ships are allowed through the Strait of Hormuz, while others face massive fees just to pass. But here's where it gets even more significant. Those fees aren't being paid in US dollars, they're being paid in Chinese yuan. Iran has effectively turned a global energy artery into a toll system operating in a currency that directly challenges US dominance. Chinese vessels are transporting oil, and those transactions are also being settled in yuan. This isn't speculation, it's happening in real time, within the physical supply chains that power the global economy. Meanwhile, China isn't just benefiting from the situation, it's building an entirely new financial system designed to replace the Western model. A digital yuan infrastructure is expanding rapidly, and incentives are being introduced to encourage adoption, including paying interest on digital currency holdings. In simple terms, they're rewarding users for moving away from the dollar. Individually, these developments are significant. Together, they form a coordinated challenge to U.S. financial leadership. As confidence in the dollar weakens, China is positioning itself as an alternative center for global capital. And the shift is already visible. Major institutions are adapting. Demand for yuan-denominated financial products is growing, driven by rising concerns about U.S. debt, inflation, and geopolitical instability. Whether those concerns are fully justified or not doesn't matter, perception alone is enough to move markets. Currency strength is also playing a role. The yuan has been gaining ground against the dollar, signaling a shift in confidence. Combined with bond yields, investors are seeing competitive returns in Chinese assets, especially in a volatile global environment. A stronger currency also benefits China in other ways. It lowers the cost of importing energy and raw materials, shielding its economy from price shocks that are impacting other regions. This stability, combined with a manufacturing-driven economy, continues to attract global investment. At the same time, Hong Kong is pushing forward with large-scale digital bond issuance, potentially the largest in the world. These bonds are designed to operate across currencies and are powered by blockchain technology, allowing faster transactions, lower costs, and reduced dependence on Western financial systems. This is more than innovation, it's a strategic shift. A parallel financial network is being built, one that bypasses traditional intermediaries like Western banks and systems such as SWIFT. Transactions can happen directly, efficiently, and with less exposure to sanctions or external control. China's broader goal is clear: reduce reliance on Western financial infrastructure and expand the global role of its own currency. While the yuan's share of global trade finance is still developing, it's growing fast and already surpassing some major competitors. However, challenges remain. China is still partially exposed to global financial systems, which is why it's accelerating the development of alternatives, especially blockchain-based financial tools that can operate independently. At the same time, there's another race underway: artificial intelligence. The U.S. is investing heavily, far outpacing China in total spending. To compete, China needs deeper access to capital, which explains its push toward new financial instruments and global investment channels. Low interest rates at home have created a window of opportunity. Chinese entities are borrowing aggressively now to lock in cheap funding before inflation rises. That capital is being directed into long-term strategic sectors: technology, energy, and advanced manufacturing. The broader competition between the U.S. and China is no longer just economic, it's technological and structural. The outcome will shape global power for decades. Meanwhile, developments in the Middle East continue to act as a catalyst. Control over energy routes gives leverage, and any disruption can ripple through global markets. Rising oil prices, geopolitical tensions, and uncertainty all contribute to financial instability. In that kind of environment, different economies respond differently. Some struggle under pressure, while others find opportunity. China, with its diversified energy strategy and growing renewable capacity, is positioned to absorb shocks more effectively than many expect. Trade data reinforces this trend. China's export strength continues to grow, driving demand for its currency and expanding its influence in global markets. Another key factor is gold. China has been steadily increasing its gold reserves, reducing reliance on foreign assets and strengthening confidence in its currency. Gold provides security in uncertain times, and China is accumulating it at scale. All of these moves point to a larger shift, a gradual transition toward a more multipolar financial system. The US dollar remains dominant for now, but its uncontested position is no longer guaranteed. As global tensions persist and economic strategies evolve, the pace of change is accelerating. What once seemed unthinkable is now unfolding step by step. So the real question is, where does this go next? Will China continue expanding its financial ecosystem and attracting global capital? Will more countries diversify away from the dollar? And how will ongoing geopolitical conflict shape the outcome? Let me know your thoughts in the comments. If you found this breakdown useful, share it with someone who needs to understand what's happening beneath the surface. Stay informed, and I'll see you in the next one.